Yo, what is good, family? Hope you all are having an amazing day. In today's video, we're gonna break down the setups we have had since the last session or since the last YouTube video. Basically, we've had a lot of scenarios that we didn't break down, so today probably you're gonna have a longer video than usual. First of all, let's go over last Friday's setup, and was basically this 9 a.m. London session. We're gonna start from right before the open. And what we had on Friday's session with the private group of students, in this case was in Spanish, where a lot of English students also tune in for these ideas, was this beautiful structure. All right, we've had a lot of liquidity graphs and everything, but the most important thing was high and low. This impulse made a bearish break of a structure, which was a quite significant movement. And then we had first impulse, then first pullback, to then create a second impulse. So this was the beginning of what could potentially be a rule of the third impulse to the downside, right? Now, this rule of the third impulse to the downside needed from a second pullback. All right, the second pullback obviously is not here yet. We have to wait. So there was no possibility to go bearish. Now to go bullish, we had this one. All right, we had this bullish break off structure to the upside, which was already a valid pending order. Now a few candles into the London Open, we had this bullish candle, which is enough for us to have a second pullback. All right, remember, on a bearish structure, a bullish candle is enough for us to have a bullish pullback. Now, once we have this, we can set up the bearish rule of the third impulse to the downside. So we have this range: bullish pending order, bearish pending order. We have both as valid. Now, on the buildup of the structure, we can see the market doing something that is calling our attention. We see the price doing a low, high, higher low, higher high. Bearish candle first makes the high and then the low. Therefore, we have first impulse, first pullback, second impulse. Now, same thing as before. Right now, we need a second pullback. All right. The second pullback comes with the very next candles, but the second pullback is not appearing yet. But as long as we have one candle giving the high and a different candle giving the entry, is more than enough for the bearish break of a structure. Like I said, for the bullish rule of the third, we need a second pullback, which we don't have yet. But for the bearish BOS, this is valid. As long as we have, like I said, one candle doing the high and a different candle giving the break of a structure. So basically, on this very next candle, market went to the downside, breaking this higher low. Obviously, from this big bearish rule of the third impulse, we go for this bearish BOS. And from this bullish BOS, which is also big, we went to potentially have a bullish rule of the third. Eventually goes active the bearish break of a structure, so we don't take any other possibilities in consideration. And that was the setup that we had on Friday. This was the setup, basically, invalidation right above the high, and the exit at the 1-to-1 risk to reward ratio. This was kind of a clean setup, right? This didn't take much to go to our exits, but that's basically how we went from a range of 520 pips to a range of 170 pips, which is a quite big smaller range. I mean, it is a big reduction of pips, and that's what we want. All right. Obviously, if we had the big bearish BOS, the big bearish rule of the third, I will go with it. All right. It will be like this: entry at the second lower low. The invalidation will have been at the highest high, and the exit will be at the 1-to-1. This will have been 1000 plus pips, and this will have been my trade. If I didn't have this small bearish BOS, I will go with this one. But because the smaller one happened, I ignored the bigger one. Therefore, I have also an exit for my session. It happens way earlier because the invalidation goes from almost 1200 pips invalidation to right now 180, which is obviously way better. Now, for the next setups, it was today. All right, this setup is from last Friday. Today is Tuesday. So yesterday it was a loss. All right. So Friday was a win. Yesterday was a loss, and today was a win. Let's go over today's scenario. Today at 9 a.m., exactly what I was looking at the market when the session was being open. Is very similar to the scenario from last Friday, where we went from a big range to a smaller range. Right here we had high, low, lower high, and lower low. Therefore, this was my last high for my bullish pending order. This was a bullish break of a structure, and this was a bearish rule of the third impulse. This is fantastic because at the end of the day, we're having a quite good range, very clean. This is a range not so big, all right, that's 160 pips, so that's good. But then market starts building this structure. One interesting thing, in the live market, we have this type of advantage to see how the market is building the candles live. So right here, we will say, all right, this is low, high, higher low, higher high, because a bullish candle first makes the low and then the high. That's one possibility. But if we go to the 1 minute, this is 9 a.m. candle, right? So this is basically from 9 a.m. to 9:04. All right, this is the first M5 candle from the session. We can clearly see that first makes the high and then makes the low. So it doesn't follow the rule of bullish candle, first makes the low and then the high, but right here first makes the high and then the low. This basically tells us that the structure, instead of being like this, all right, it is like this. And this can seem like a small change, but this changes everything. If it was like this, we will have had a valid bullish rule of the third impulse. But because it was like this, we have nothing. Very important realization. Now, next candle. Now it does create the high. So we have now a first impulse, first pullback, second impulse. So this now is building a new structure, which is fantastic. Now we have the bearish BOS as valid. The exact same thing that we had on last Friday. All right, as long as this as one candle makes the high and a different candle makes the low, that's beautiful. But for the bullish rule of the third impulse, we need a pullback. Because we're bullish, we need a bearish candle. Boom. There we have. At this point, we can switch the setups because now we have officially a whole new range for both directions. Our bearish idea is going to be at this higher low with a bearish break of a structure. Our bullish idea is going to be at this high, which is a higher high because it is a bullish rule of the third impulse. Next candle, the rest is story. All right, activates the bullish idea. Therefore, we cancel the bearish pending order, and then market goes straight to the exit. Very clean setup. Just a very clear example of how we go from a bigger range to then go to a smaller range just by following up how the candles build up. Now let's go over the swing system because we had a few setups already. And, we had last Wednesday, we had this bearish idea. We had the invalidation right above this high, and then the exit was below this low. All right, we dove deep into this idea on the live sessions. I'm not gonna repeat myself a lot. If you wanna get into the private group of students, jump into the link in the description of this video. You will see my Instagram. You can talk to my DMs. We will arrange if we have free spots. But basically, we have a 4 hours bearish range, which was a high that made a low. And this is the small trick. All right, I will reveal this for you guys. I reveal this because I understand that people that watch this free content, eventually just a small percentage of you guys will actually apply this. From those, only a small percentage will actually talk to my DMs to then dive into deeper mentorships and actually will take advantage of this. Not because I talk about super exclusive information, which I do, but actually committing to the practicing and mastering of this craft. Only a small percentage, so that's why I can talk about this into these videos, because only a small percentage eventually will commit to master this. Anyways, we have this bearish range, high that makes a low, but realize the exact same way we do on the M5, we do on the H4. This candle is not breaking previous candle's low, therefore this is a high, low, lower high, lower low. Now when the pullback is compounded by only candles of the same direction of the trend, this is a PRP. This pullback is built by bearish candles and also a bullish candle. Therefore, this is a significant lower high. Now, this pullback is only built by bearish candles. Since we are on a bearish structure, this is a PRP. PRP stands by potential reversal pattern, meaning a small BOS, simple. Now, this doesn't change the whole trend because we're still bearish, but this creates a bullish range. Let's keep it that way. So when we have the bullish PRP, this is very useful for us to say, all right, we have the 4 hours bearish range. Now we look for the 1 hour reversal. Let's go. On the 1 hour, we have a high, low, higher low, higher high. Perfect. Now this is the bearish break of a structure level. Candle breaks and closes below the level. Beautiful. Invalidation above the high. This is the setup. Now, the exit should be right here. Perfect. A 1 to 2.75. That looks good. But the point that you guys are ignoring is that, yes, we are bearish on the 4 hours, but we are bullish with a 4 hours PRP. That doesn't invalidate the bearish idea. It just makes you to get out sooner, because market can respect this bullish range as it did. And we broke this down on the live session exactly this last Friday. We broke down the bearish idea. We broke down the exact exit level. We said, guys, when we have a bearish range in this case, but a bullish PRP, we put the exit at the demand area of the bullish PRP. The demand area is basically this, all right? All of this is the demand area. Why? Because we can clearly see that all of these wicks are liquidity, and right here then opens the imbalance. We don't have a sell to buy candle per se, an order block, but we have the whole demand. Therefore, the exit, as long as we have a 1-to-1, it's good enough. Right here, boom, 1 to 1.13. That's fantastic. Look, yeah, the market went lower a little bit more, but it didn't break the lower low because it respected the demand area of the 4 hours PRP. That was a snipe of an exit. Fantastic. Then the market went to the upside and broke the 4 hours lower high. Beautiful. We have a bullish range, significant bullish range. We see the pullback, and now we just look for the entry. Look at this. Same way that we use for the M5R, we apply on the 4 hours and the 1 hour. High, low, lower high, lower low, lower high, lower low. Boom. Simple, easy peasy, right? Same thing. This candle is not breaking previous candle's low, therefore this is a lower high. We wait for the break, but not only the break, we look for the break and close. Why the close? Because then we have the possibility of not looking at the chart for the whole hour and only looking at the chart when the hourly candle is about to close. If we apply the same methodology that we do on M5R, which is buy stops and sell stops, we will be looking at the market constantly because market can break out at any moment. This is an hourly candle, but this can go active at 10:10, 10:35, 10:15, 10:47. All right, we will have to be with the phone constantly every single second because we don't know when the market is going to break out. But because we are on the 1 hour candle, we can say, all right, let's wait for the break and close. And we only have to look at the charts for this specific strategy, let's say 3 minutes before the hourly candle closes. If nothing is on the charts, a lot of times happens. All right, I scroll through my pairs, nothing happens. Boom, just 30 seconds checking the chart. I close it out. Let's wait for the next hourly candle. Boom, my alert hits on the phone. I check the charts again. If nothing happens, boom, I close it. But if we have some sort of build up like this, I will spend a few more seconds on the charts to make sure that I'm analyzing the structure properly. Just a few more seconds because obviously it's a 1 hour candle. It's not going to change that much. But the most important fact is that right here it was Friday. I was getting dinner with my girlfriend at the house, chilling, watching a movie, fantastic. Then we went to bed, 11 p.m., and I saw that the candle was breaking. All right, 10 p.m. candle was breaking, 11 p.m. candle was breaking in somehow above the BOS level, right? So I said, all right, let's wait. All right, it was like 11:25, so I made time until midnight. And when midnight hit, I saw the market breaking in, closing above the level. So I executed. Fantastic. Now, obviously, I knew that this will not hit the exit straight away because it was Saturday. All right, it's very rare that we have an exit on a swing system being hit on a Saturday, unless it is like like the previous Saturday when we had, you know, this thing between Trump and Maduro. But besides that, I mean, it's very rare that we have a volatile Saturday. Just look at this Saturday. This is when Trump arrested Maduro, right? Just look at this. Insane. But whatever. Saturday, classic price action, normal consolidation. Eventually, from Sunday to Monday, it skyrocketed to the exits, and this is fantastic. Now, very important, on the weekend we have something called a weekend cycle, which I'm not going to break down right here. We go through this very deeply on the live sessions with a ton of trades that can happen between Sunday and Monday on the weekly close and the weekly open, and that's fantastic ton of opportunities. So we break that down on the live sessions. Not going to break that down right here. But on Monday yesterday we had another setup. Which was this long. All right, very similar to this short. This is the exact same methodology. Let me break this down for you. Basically, we had a 4 hours higher high. Beautiful. Let's go to the 4 hours. In the 4 hours, we had, this significant range low that makes a high, but then internally we had this 4 hours internal that made this 4 hours higher high. All right, so basically we have everything bullish. We only look for longs. Market pulls back, taps the 50% of the fib, obviously, and then look what it does. It breaks the 4 hours internal. All right, you're gonna get distracted. It breaks the 4 hours internal, but it doesn't break the 4 hours generic higher low. This is very interesting because now we're doing a bearish range on the internal structure, but we're keeping the generic structure bullish. So we're doing the exact same thing as we did here, right? We have a bearish range, but market is still respecting our bullish range, so the buy makes sense, but with a smaller exit. That's it. Right here, we picked up this demand area because that was the demand area of the bullish range. This is the bearish range. So we're going to pick up a supply area, which is this one. It's the most obvious one, just taking liquidity or a clear order block, whatever. As long as it gives a 1-to-1 or above, it's good. So right here, we had the 1 to 1.06. Pretty, it was not a 1-to-1, it was a 1 to 1.06. All right, pretty tight, but it was valid anyways. We could have the exit right here instead of a 1-to-1 will be a 1-to-2, but it's the exact same thing as we had right here. In my opinion, I prefer +1 and +1 instead of -1 +2, if that makes sense, right? So basically, next hourly candle, we had the break and close, next hourly candle, boom, massive volatility. This was at 4 p.m. All right, so I was doing other business right here at this time yesterday, properly executed. All right, no issue at all, and the movement was massive. Then the next candle eventually hit, and it didn't take the higher high until today. So now it makes sense. Market is skyrocketing, but just look at this beauty. Bearish exit, bearish exit, a sniper exit, then swing bullish exit, then intraday exit. This is fantastic. Fantastic, guys. So yeah, with this being said, this is a wrap. All right, see you guys in the next videos. Remember, on the description of this video, you have the link to my Instagram. You can talk to my DMs and check if we have available spots for the private group of students. You will have access to all my intensive course and learn all my strategies. Access also to all my live analysis sessions that I do from Monday to Friday in English and Spanish. And also to my private app where I send all my market ideas in Forex and crypto. With this being said, family, see you on the next videos. Let's go.